probably 40 points, right? They'll jump 40 points just because it's reflective of the balance. So you're absolutely right. Good point. Right. All right, so how do I get credit scores? Well, I feel it's important to emphasize, first of all, by paying your bills on time, right? You got to get some installment loans. The credit bureaus now have even made it possible for you to self-report, right? So I pull people's credit reports now, and I see telecom, like cell phone bill. I see insurance, where they self-report utilities, how much they pay on their utility bills. So they've now made it possible for people to self-report some of those other things that don't typically report up, right? The non-traditional things, in order to help with their payment history. And that's why they're doing it, because it helps with payment history, right? So you're showing on-time payments consistently to your utilities, to your credit card, to your cell phone bills, right? That's helping the scores, okay? So one way you can get it is you can get installment loans, or you can also self-report certain bills. That's something new that popped up that just happened, right? Where they now allow you to report that stuff, okay? And so we're going to see a slight increase in some people's scores if they take advantage of that. I'm starting to see a lot of people, when I pull credit reports, are self-reporting stuff to their credit bureaus, okay? That's huge. It's something you can do.
Well, they used to always, they've had it before, but it was where the lenders would do it for you.
Right.
So now you're saying that we as individuals can do it on our own.
You can do it on your own, yeah. Yep, you sure can, okay? Installment loans, another good way to get a credit score is go to your bank, go to a credit union, give them $1,000, right? They'll give you some credit, they'll report for you, and now all of a sudden you got an installment loan. That's your money, you can use that money, but that's another way to get them to report some positive news about you because it's your money. Okay, it works a lot like a secured credit card as well as another way to get a credit score. Get a secured credit card. If you can't qualify for a regular credit card, get a secured credit card. What does secure mean? It means you secure that line of credit with the money out of your own pocket. So you go put the $200 or $300 down, they'll give you a credit card. It's the same credit card as any other credit card you can get. You go use that, and you pay it off when the bill comes every month. It's really important to make sure that you understand you got to let the bill come. With credit cards, you got to let the bill come. Don't go use it at Quick Trip and come back to the office and pay that off and say, hey, I'm going to get my credit scores built up. It ain't going to happen that way. Why? Because the credit card company has to pay Experian, TransUnion, and Equifax money every time they report. Okay? That's how those three companies are not doing this out of the goodness of their heart. They make money every time someone reports to them about you or me, they make money. Anytime they provide a credit score to someone, they make money. Okay? So if I'm a creditor and I got to pay you, Experian, why would you want me to pay you if I ain't got a balance? I'm not going to report anything on you. Okay? So if I have a credit card company, I'm not going to report on Taffy and how well she's paying if there's no balance. So Taffy's got to let the bill come, use the credit card, let the bill show up, then pay the bill off. Okay? Don't pay it off before the bill arrives, because it'll still show zero. There's no bill, right? Right? So that credit card company is not going to go and incur a charge from those credit bureaus if there's no bill. Okay? So secure credit cards are wonderful. Installment loans, self-reported, those are great ways for you to start getting a credit score or for you to start building your credit score. Okay? You can start where you are right now. Okay? It's never too late. All right? It's never too late. Start where you are right now. If you're not where you want to be, check your credit report. We all get a free one annually. All of us do. Check your credit report. See where you're at. Credit Karma will give you an indication of where you're at. It won't give you your actual FICO score. Credit Karma is a Vantage score. It's a different model entirely than FICO. Okay? Credit Karma is owned by those three companies. It is a site created for the consumer. But we as banks, insurance companies, credit card companies, we all use a different FICO score. All right? Those three bureaus, again, I told you, how do they make money? By creating models in ways that you can pay them by reporting. So they have 40 to 60 different FICO models. Okay? Kevin and his insurance company may pull a different model than I'm going to pull as a bank. All right? Taffy and her cell phone company is going to pull a different one. You're going to pull a different one. Everybody has a different FICO model, which is part of the reason why everyone says, well, how come my scores are different than what you see?
When they check Credit Karma, that's a different model.
That's a different model.
So it's not going to exactly match. It's a good
idea. It's good to check that.
That's
So
right.
you have an idea of, and actually you can see what's being reported. Even if the score is not what you need it to be, you can know, is that supposed to be there or not?
That's right. That's right. It's a good indicator, right?
Right.
Up or down, it's giving you a good indication of where it's going. It may not match up, but it's a good indication. There's sometimes we pull it and FICO is below Credit Karma. Sometimes we pull it and it's above, right? It just depends. But it's also because the banks use a different FICO model than anybody else uses, okay? People always ask, why do my scores differ? Well, there's one reason why it differs. You're checking Credit Karma, which is Vantage. I'm checking FICO. Well, how come yours differs than Kevin? He's an insurance guy. He checks FICO. Well, Kevin's only interested in certain things that he needs to measure the risk for an insurance company, whereas as a bank, I need my different measurement risk, right? It's a different FICO score, okay? So that's why the scores will differ. They'll also differ because you may look at Experian, Carlos may look at TransUnion, I may look at Equifax, right? So we're all looking at three different ones, right? The other question I often get from people is, why do those three different scores differ? Well, because Secure One credit card company doesn't report to all three. They only report to one. Why do they only report to one?
So they
Right,
it
money
Costs money. Yeah. Now trust me. Trust and believe. If you are late on your payment, they will report to all three.
Sure, yeah.
They will report to all three. They'll hit you in all three. But they only will report to one, the good news, because that's the one they pick. Some of them report to all three. If you're looking for a secure credit card, or if you're looking for something to help start getting and building scores, you want to find a card that reports to all three bureaus. Okay? And I've got some here that I'll show you, but you want to find one that reports to all three. All right? But that's why the three differ, because not all the creditors report to all the different agencies. Make sense?
How does medical bills affect your credit?
Medical bills will initially have an impact on your credit because it's a derogatory item. It wouldn't stop you from getting a mortgage, but it would impact your score a bit. The best thing to do if you have a medical situation is see if you can get them deleted, right? Whether it's either a pay for deletion or go through a credit company that can maybe help get them deleted. But they'll affect your score a little bit because they're a derogatory item.
I didn't know which pie that will fall in.
It'll fall in the part of the not necessarily paying on time, but the type of debt, because that's a derogatory item that's shown up in your credit report. Okay. Make sense?
Can things be removed?
Yes, things can be removed. So there's a lot of credit companies that are out there, and some of them what they'll do is they'll send letters in to challenge items on your credit report to try to get them removed. Sometimes there are inaccuracies or errors. Medical bills, almost 40% of medical bills are errors, right? Because they don't really necessarily know. All they know is that someone came in. Well, Carlos Ceballos, I'm sure there's a lot of Carlos Ceballos out there, right? So Carlos is a perfect example where if he had something on his credit report, he probably want to double check, especially if he knows he didn't go to the hospital, right? Because it might have been someone else with the name Carlos Ceballos. So just by checking your credit report, you can identify that and get that removed. If it's something that is outdated, if it's resolved, so you've paid it, and it still shows up on your credit report as a derogatory item. Well, guess what? You paid it. Let's get that thing out of there, right? You can get that off there. There's no reason why it should be there. But most people don't know that, so they just pay it, and they leave it on there, and it just stays in a derogatory state. And it hits you, it still hits you, over the course of 7 years until it drops off.
What if you made arrangements to pay someone, and you negotiated and didn't pay the full price, but they negotiated a lower price? And it shows it's paid, but I think it shows them they're a little bit different than, it doesn't say paid in full. So then that's gonna be a little bit different, correct?
Yeah, so it'll pay for less than the balance. So if you negotiate to pay something for less than the balance, if you have a collection on your account, the best thing to do is to pay for deletion, right? You just say, listen, I'll pay you X amount, but I need to delete it. Because otherwise, it doesn't really do you any good. In fact, in some situations, it could hurt you. So once you pay a negative item, like a collection item, it refreshes what's called the date of last activity. Okay? So it refreshes that date and changes it to today. And it leaves the status still showing as a collection. So guess what it looks like to those credit bureaus? Like you got a new collection.
Right.
Right. So if you're going to pay something that's in the collection status or a bad debt status, try to get it paid for deletion, meaning I'll pay you, but I need that thing deleted from my credit report. You want to get that in writing before you pay, because once you pay them, they don't have to do nothing. But get it in writing so that you can take that letter to the bureaus and say, hey, listen, they agreed to remove this from my credit report. I paid them so we can get it deleted. And then you'll get an immediate bump on your credit score because that's a derogatory item that's being removed. Okay? Make sense?
Okay.
Good question. Any other questions?
The 7-year
Yeah,
rule,
yeah.
do things really come off?
They
Because I've seen some things that are old,
that are still on there. Yeah, they're
Still on
they're supposed to come off in 7 years.
I guess just contact the agency.
Yep. Contact the agencies, mail them a letter, go through a credit bureau or a credit agency that can do that. They just have them removed. You know, most of the times, we just don't know this, but most of the times, because of the Fair Credit Reporting Act, if something is incorrect or erroneous on your credit report, if you write a letter to those bureaus, they're supposed to get that off, right? They have 45 days to respond. So a lot of times, these credit individuals who are doing credit repair, they just know those laws. They just know those laws well, and they can get that stuff removed quickly just with a simple letter. We can do the same thing. We just don't know how to do that, right? That's why those guys have their industry, right? But yeah, it's supposed to drop off in 7 years, but you're right. A lot of times it doesn't drop off.
Is there a discrepancy? Because I know when I went to credit card tracks, there's a class I went to
Yeah.
when I was in banking, and they were saying that that's a misconception when people say after 7 years it drops off. The start date is once you pay it off, and then 7 years after that is when it comes off. So is there some truth to that, or is it just if you don't pay it, it's gonna just drop off in 7 years? I thought it had to be paid off first.
Any item that's resolved, whether it's negative or not, right? Once it goes into collection status, again, a lot has to do with the restarting of the date. So the collection agencies know how to play games with those dates, right? So what'll happen is they'll sell the debt.
Right.
They'll sell the debt to Carlos. Well, Carlos will report to the agencies, and there goes a new date. So they can keep that debt live for as long as they really wanted to, as long as they keep selling that debt. So I'll give you an example. Me personally, I had Sprint years ago, before I got in the business, and I stopped using Sprint, and somehow they said I still owed them, right? So they sold the debt, and I didn't pay it, and I kept getting called from different collection agencies, right? So I mean, I've gotten it removed from my credit report now, but I kept getting called from them because they just keep selling the debt. Now it's not even on my credit report. So it's funny when they call me, they still call me every once in a while. And they're going, well, this is going to show up in your credit report. No, it's not. That thing is like 15 years old.
Right.
You know, get out of here. That's not going to show up in my credit report. But they know they're just keeping that debt moving. And if it were on my credit report, it would keep restarting the date of last activity. So they could keep
price
that
drop
going.
off. Some may, so unless it's resolved, if it's never resolved, are you saying that it just drops off in the 7 years?
It's supposed to, but there's sometimes
And
it
some
doesn't
is,
drop
yeah.
off. Yeah.
Okay.
That's why you got to check your credit report. That's why you got to check your credit report. You got to look at it because there's some things that are on there that are wrong. You got to get it removed. And the only way it's going to happen, you own your credit report. I own my credit report. I can't blame that on Sprint. I can't blame that on the student loans. I own that, right? So I got to check it regularly. That's why they give me a free one that I can pull every year, right? Or I can go to somebody else and say, hey, pull my credit, right? But if you don't own it, hey, you never know what's on there, right? But you got to know what's on there. You got to look at it. Okay? Good questions. So how do I boost my scores? So we talked about paying on time. Credit cards. When you get a credit card, when you get a revolving credit card, you remember divide by 3. Okay, just remember divide by 3. What does that mean? So there's A, B, and C, and those are levels of utilization of your card. So for example, if I have a card that's $1,000 limit, if I divide that by 3, what does that give me? About $333, right? If you want to boost your scores and you want to keep them going up every month, don't go over $333. Now you can use that whole $1,000, but guess what? When the bill shows up, you better make sure you're underneath $333. Okay? The easy way is just don't go over $333.
Right.
Use it. This thing. Hey, you know what? That's my cap. Okay? Why? Because as long as you are 30% or less of your limit, you're going to be gaining points. Okay? 30% is a C grade, right? A, B, C. 30% or less is a C grade. 20% or less is a B grade. 10% or less is an A. So you want to get an A report for your credit every month? Don't go over 10%. Do not let the balance go over 10% every month. Use it, at least pay it off, or make sure that it's underneath 10%. What's 10% of $1,000? $100. Okay? So either stop at 100, or when that bill comes, make sure you either pay it all the way off or get to 99. Okay? you'll be earning an A credit. People who are walking around with 800 credit scores right now, they follow this A, B, C rule. They follow the A rule. Okay, 800 credit scores, those people don't carry, they really don't carry no balance. They use the card, they pay it off. They don't carry the balance, okay? Go ahead, Aaron.
I was just gonna say, what if you had like multiple credit cards? You still just do the same thing.
Yeah, that's a good question. It is each individual credit card. So if you got 3 credit cards, you're going to get a 3 times positive A report card if you do this on each card. Okay? And now you don't have to do it on each card. You just need to make sure you're doing it on one card. Okay? Go ahead.
Sorry.
That's all right.
I used to think that there was like a thing where even though you have a balance, like having no balance is good, but shouldn't you kind of have a balance every month? Just a little bit? You might have already touched on that.
No, it's good. You want to have some utilization. You want to have a little bit of utilization.
Okay.
And you know what? It doesn't take much. A tank of gas or a Happy Meal, or in my case, I use my card for to go to a movie.
Or a movie and another movie and another movie.
I said like movies, so I have a credit card that I'll use for movies.
And you don't let her know. Movie either.
I'm at a movie, and I use another credit card for gas, right? And I use another credit card for travel, right? So that's what I do with my credit cards. They're all each of them has their own responsibility, and so I know I can keep it straight. I'm going to get gas. Okay, I got to use this card, right? I got to go to the movie. I'm using this card. Okay, the movie has the high budget. Because my kid likes to, the movies are not cheap, right? It's like $100 every time we go to a movie. But yes,